Hi everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Monday the 20th of September. Now there's a growing sense of risk aversion that is coming through markets, and that happened throughout last week and it's again continuing into Monday morning. Equity markets down on the futures quite sharply once more today. Also the dollar continues to strengthen and that is impacting throughout markets. You've got forex major pairs that are impacted by that stronger dollar, but also commodity prices as well. Now this is all coming ahead of the Federal Reserve meeting, where the Federal Reserve is expected to start to lay out the path towards tapering in a more formal manner. Although there's no expectation of the tapering to start yet, any hints towards the taper can continue this corrective move that we're seeing in risk assets. And also this is coming as consumers in the States on Friday, consumers on the Michigan sentiment numbers were again not really all that positive, and certainly coming at a time that the Federal Reserve is starting to turn a little bit more hawkish is not ideal, and certainly equity markets falling quite sharply. Those S&P 500 futures are down almost 4 or 5% from their highs now, so that is a considerable move, and it could continue through this week until that Federal Reserve meeting at least. So in terms of today's markets, well, we haven't really got any major data to really report on, but you do have a Canadian election that may well certainly impact on the Canadian dollar, so watch out for volatility there. Now, the charts we're looking out for today are on cable. Cable has been falling away in recent days, as most FX major pairs have been against the dollar, and sterling dollar down, so look at the technical implications of that. Also silver, that again, the stronger dollar has whacked silver lower, and again, is this now a decisive downside break? Maybe signs of a bit of a technical rally today though. And finally, looking at those S&P 500 futures where equities are down once more, looking at the progress of this potential start of a taper tantrum. So let's have a look at these charts. And onto the INFINOX MT5 platform, and starting off with sterling dollar. Cable has, as many of these forex major pairs have been, basically cable has been ranging for several months really, and it's now broken below what essentially is the sort of middle area of that range play, the range coming between sort of 36 and 40 big figure. So falling away below the 38 big figure in recent days, that move has now accelerated lower, and coming below that initial line of support at 37.30 area, that now is a key breakdown on a near-term basis, and now obviously is testing the 36.80 level of support. But you can see here with the momentum on the RSI just accelerating away, but with downside potential, you can easily see, I think, a retreat back towards that 35.70, 36 area, which is essentially the bottom of this near to medium term range that cable has been trading in. And I think it's all in keeping with the momentum, which is still obviously with that downside potential, but negative bias across the board. Back on the 4-hour chart, you could argue slightly stretched on that RSI on the 4-hour, but I think essentially this is downside momentum growing rather than an oversold condition, and I think selling into near-term strength. You've got the resistance coming in around 37.50 area. 37.30 to 37.50 is a fairly strong resistance now. And with the silver chart, we can see again the strong dollar has pulled silver sharply lower. That breakdown on silver, go out there, you can see coming back to October-November time 2020, so almost a year ago, silver hasn't been this low. And the key breakdown, you can see lower highs, lower lows, breaking down old support becomes new resistance. So that level initially on a technical rally, 22.75 towards 23 figure area. And if I again zoom in here, you can argue that today maybe coming into a bit of a hammer candlestick. You can see that RSI picking up off 30. Is that a technical rally? Well, one to really unwind the move. This is the 4-hour chart. You can see the negative configuration on that RSI on the 4-hour failing around the 50 mark. So any unwinding move is a chance to sell. 22.75, 23 figure resistance initially on that daily chart. You can see the old support there, but essentially if it really went, you could see it up into this area, 23.80 area, but essentially I think 22.75, 23 figure is where we're looking at now. And the S&P 500 futures, well, I've got these areas marked in green. These are near-term sort of 3-4 session corrections before the buying pressure came in. That uptrend has now been broken, and the corrective move has been a couple of weeks now, so it's essentially far greater than the corrective moves that we've seen previously, and you're now back into the initial band of resistance. Really key, that sort of 4-5% zone of correction. So you're looking at that 43.60 area as a 43.50, 43.60 as a key basis of support now, and if that gets broken, you're looking at a much deeper line of correction. You can see the momentum far more corrective than we have been previously. But look at the 4-hour RSI. You can see again it's at a level that you could argue that's some technical rally bounce territory, but 44.25 resistance up towards 44.75. That's now really where sort of any unwinding move is likely to go, but certainly near-term corrective momentum is growing. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Wednesday, where the Federal Reserve meeting will be front and centre. So I'll leave you with the support and resistance tables, and I will speak to you then. Thank you very much.